We've got an action-packed week filled with housing data. So let's talk about how this has been impacting mortgage rates and more in this midweek market report with the Ryan Grubbs mortgage team here at Cross Country Mortgage. Today's Wednesday, August 17th, guys. And so we have had a lot of information coming out from the housing industry. So let's talk about some of the information we've been getting so far. Monday, we got the National Association of Home Builders coming out with their sentiment report showing a reading of 49. That was down from the estimated 55, and this is the lowest that we've seen it since May of 2020. Now, what does that number tell us? Any reading that we get under 50 shows that there is a consensus of contraction within the housing market. And that's what that is telling us right there. So home builders are feeling things are slowing down, okay? Now, that leads into the information that we got on Tuesday. On Tuesday, we got single family housing starts coming in down 18.5% from this time last year, and permits for single family housing down 11.7%. So that tells us right there, home builders have felt the slowdown within the market, and they're slowing down on the number of homes building, which now leads me to one of the things I get a lot of people asking me in regards to the fact, do we see housing prices coming down? And for this reason, I say no. And the reason is that home builders are seeing the contraction. They don't have the inventory levels right now, and they're slowing down on new housing starts because of the pullback within the market. So because of that reason, we're not going to see home prices decline, unlike we saw in 07, 08, 09, where we had all of a sudden a massive amount of inventory hit the market, more inventory available than what there were buyers in the market. So that is what caused prices to go down. We don't have that situation right now, and that's why we're not going to see a big fall off in home prices. All right. Now today we had retail sales coming in flat, which again is going to be a big piece of what the Q3 GDP is. Now keep in mind we have a negative Q1 GDP and a negative Q2. So Q3, a lot of the market's really waiting to see kind of what those initial readings are going to look like and how far we're into a recession are we going right now. Okay. And then this afternoon, we had the 20-year bond auction coming in with very weak demand, which that's a big piece that we want to look at because these 20-year bonds, these long-term bonds are going to have more impact towards mortgage rates. So let's take a look at mortgage security prices, see what's happening this week. So as you can see, we've been squeezing into a very tight channel right now with mortgage-backed securities. And I've got these green lines in here outlined to show we're basically sitting real tight between an upper level resistance and lower level resistance. So with this data today, we're really going to see if we can try to either break through on that upper end and see mortgage prices going up, which will help bring interest rates down, or are we going to break through that bottom channel and see mortgage prices going down, which will then cause interest rates to start moving up a little bit. So it's going to be a great day to kind of watch the market, see what happens, but give us a call. We'd still love to help you out with that free loan approval, free credit check, and help you into that home purchase or refinance. So give us a call. We're here to help, and we'll see you back next week.